Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense corporate filings to uncover what is really going on behind the scenes. And today we're looking at a report that might just have some interesting notes to impart. Get ready as we slice through the latest filing from American Express to see what their financial health and future plans are shaping up to be. Before we dive in, if you dig getting clear, no-nonsense analysis of these official documents, make sure you are subscribed. And hey, we've built a fantastic Discord community where we break down these reports further. So join us there, the link is in the description. Alright, so what we have here is a current report, essentially an update on significant events filed by American Express, or AMEX as many know them, on the 24th of October 2025. This report concerns a rather substantial financial move they've made. We're talking about American Express Company, a giant in the financial services world. You probably know them for their credit cards and travel, related services, but their business extends much further into corporate payments and merchant services. They are a cornerstone of the global financial system, and their moves are always worth watching. Now, this report touches upon their publicly traded securities. They have their common shares, traded under the symbol XP on the New York Stock Exchange. They also have various debt securities, like those fixed to floating rate notes that mature in 2032, also traded on the NYSE under the symbol AXP32. These are essentially loans that the company takes out from investors, and they are a pretty big deal when issued in large sums. The core of this report is an other event, which in this case is the issuance of new debt. On the 24th of October 2025, American Express issued $2 billion worth of what they call 4.804% fixed to floating rate notes. These are due to mature in 2036, that is a pretty long time from now, a 36 in 2025. So a 10-year term. Let's unpack what these notes mean. Imagine American Express needs a lot of cash for its operations, investments, or maybe to refinance other debts. They can borrow money from a large group of investors by issuing these notes. The 4.804% fixed to floating rate part is key, initially, for a period. They will pay a fixed interest rate of 4.804% per year to the investors holding these notes. However, after a certain point, this interest rate will float, meaning it will adjust based on prevailing market interest rates. This can be good for the company if rates go down, and maybe less good if rates go up, but it offers flexibility and the amount they borrowed. $2 billion is a massive sum. This is a significant capital raise indicating strategic financial management and likely expansion plans or significant debt management. This issuance isn't happening in a vacuum, it is happening under an existing framework. American Express has a shelf registration statement, which is like a pre-approved permit to issue securities over time, filed as part of a Form S-3. This particular issuance fits within that existing registration. The debts are governed by senior indentures, which are legal contracts detailing the terms and conditions of the debt. These indentures have been amended by supplemental indentures in the past, showing that this isn't their first rodeo when it comes to issuing debt. The trustee, which in this case is the Bank of New York Mellon, acts as the administrator and overseer of these debt agreements, ensuring both the company and the investors adhere to the terms. Now, as part of this filing, they also include several exhibits. These are supporting documents. We're not going to dive deep into all the legal opinions, but it is worth noting that they have included consents from legal counsel, ensuring everything is on the up and up from a regulatory standpoint. There is also a standardized exhibit, the cover page of this report, formatted in a way that makes it easily readable by financial data systems. So, what does this all mean for American Express and its investors, or even just US observing the market? On the surface, for a company like AMEX to issue $2 billion in new debt, it signifies a confident outlook. They are looking to deploy capital, and they clearly believe they can manage this debt responsibly. This large capital raise could be for various strategic initiatives. It might be to fund expansion into new markets, develop new products or technologies, or perhaps to strengthen their balance sheet and have more liquidity. The fixed to floating rate structure also suggests they are trying to hedge against future interest rate volatility, a smart move in uncertain economic times. Looking at the broader picture, American Express is navigating a competitive landscape. Companies like Visa and MasterCard are also significant players, and fintech startups are constantly disrupting the payment industry. By raising this substantial amount of capital, Amex is essentially fueling its competitive engine. We're likely to see this money used to enhance their customer offerings, perhaps through new rewards programs, digital payment innovations, or expanding their business services. It could also signal a strategy to acquire other companies or technologies to maintain or grow their market share. From a Warren Buffett perspective, when a solid company issues debt, it is not necessarily a red flag, but it is an indicator that they are leveraging their financial strength to grow. The key is how effectively they deploy this capital versus the cost of borrowing. A 4.804% fixed rate for a decade is a reasonable cost in many environments for a company with AMEX. Its credit rating, the floating rate feature, adds a layer of risk, but also potential upside if rates fall. The fundamental strength of American Express lies in its strong brand recognition, loyal customer base, and premium service offerings. This debt issuance supports their ability to maintain and enhance that premium positioning. It is a vote of confidence in their business model and their executive team's ability to generate returns that will easily cover the interest payments and, more importantly, grow the overall value of the company. In conclusion, this filing by American Express isn't about immediate financial results like a quarterly earnings report. Instead, it is about a strategic financial maneuver raising a substantial amount of long-term capital. This points towards a forward-looking strategy, likely involving significant investments in growth and innovation. While the exact deployment of these funds isn't detailed, the sheer scale suggests ambitious plans. The risks are manageable for a company of this stature, but they'll need to ensure these funds are invested wisely to generate returns that outweigh the borrowing costs. What is your take on this $2 billion note issuance? Does it signal a strong future for Amex or just more debt in a challenging economy? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more corporate decoding. Also, make sure you join our Discord community linked in the description for even deeper dives. Thanks for watching, and we'll see you in the next one.